Taking a look at today's interest rate markets, let's look at the 10-year note futures today as they're realizing some consolidation today. We're seeing a pretty quiet session overall, although we did see them push up to, I think, almost 2-week highs intraday initially this morning, but then settling in the range that they've been in really for the last week or so, top end of the range, I guess, if you want to look at it that way, but holding in that 132 handle, 132.14 currently. And after a couple of volatile sessions, as I mentioned, we're seeing a pretty quiet session from a peak to trough pattern today as far as price action. And I think when you look at some of the factors playing into why we're continuing to see interest rates here and the 10-year note futures holding here in the middle 132 handle, I think it has to do with some of the data points that continue to unfold. We're seeing a series of data points coming out now that there are some weaker data points, and then you got the Fed minutes. Certainly a couple days ago, the market was trying to make sense out of that. Initially, we did see a negative reaction, and then we did see the 10-year note bouncing back nicely here the last couple of days. And so I think the market's still digesting those data points. Now, we did get some strong data points out of Europe and out of the UK overnight. So I think that's something that also is being calculated into the market construct. And the data points in the US this morning were pretty positive as well, although they didn't really indicate anything on the inflation front. So maybe that's why we're seeing this relatively quiet period today. Couple that with Fed speak. We got a lot of Fed speak that continues to roll out, and I guess there's some interpretations going on as far as the minutes, and but nonetheless, it does appear that the Fed officials that are speaking currently still indicating that they still see inflation as transient, and they're keeping an eye on the economic activity. But I think that's another factor why we're seeing really, like I mentioned, the 10-year note pushing back up here to a level that keeps yields somewhere in check, really. And you look at the 10-year yield right now of 163 basis points. That's coming off a high of 168 on a Wednesday when we did see the reaction to the Fed minutes. And then we did see selling pressure, and then, like I mentioned yesterday and into today, some buying pressure. So we're back in that low 160 handle as far as basis points, and really the yield curve is pretty flat today as well. So continuing to see this 10-year note yield holding here somewhere between the 160 and 165 level. We did get outside of it briefly, but nonetheless, this seems to be kind of the level that has been the consolidation area for the better part of the last couple of weeks.